Welcome to the Ratings Review. Today we're reviewing the Bennelong Kardinia Absolute Return Fund. The fund is actually appropriately named because the manager is targeting in excess of an absolute return of 10% per annum. The fund itself is actually pretty unique in the Australian equities space in that it combines both bottom-up fundamental stock assessment and selection with top-down macro views, and also the ability for the manager to be both long and short individual stock positions, which in our experience is quite unique within that Australian equities space. The investment team behind the management of the fund is small and consists of Mark Burgess and Christian Wright. While it is small, both Mark and Christian have extensive experience and have worked together, importantly, since 2006, even prior to the formation of the current fund under the Bennelong umbrella. One of the things that we really like is the alignment of the investment team with investors' interests. So both Burgess and Wright own the majority of Kardinia, as well as having a performance fee where they're rewarded for providing investors with strong absolute returns above the benchmark. We categorise the fund in the Australian equities long-short space with an investment style of variable beta. What that means is that the manager will vary the exposure, the market exposure of the portfolio over time. The investment process itself is multifaceted and combines fundamental stock selection, which is really based on the team's assessment of company management, free cash flow, and also industry structure. And through that process also identifies shorter term trading and or shorting opportunities. There is also a top-down macro input which feeds into the manager's assessment of how the portfolio should be positioned from a market exposure perspective. All of these things combine to make the investment process one of the more unique, certainly in the Australian equities long-short space. The portfolio construction process leverages strongly off the manager's security research and identification process and results in a portfolio of 20 to 50 different securities. This includes both core holdings, longer term core holdings, and shorter term trading or shorting opportunities. The longer term holdings generally occupy a weighting of 2 to 5% within the portfolio, with the shorter term and or smaller stock exposures being limited to 1 to 2%. Given the nature of the manager's approach and the style of the fund, portfolio turnover is high at around 200 to 300% per annum, and much of the return to the investor is generated through the manager's trading activity. From a risk management perspective, one of the key risks in the fund with such a small investment team is clearly key person risk. So the departure of either Burgess or Wright from the investment team would be material. Outside of this, the risk management constraints are extensive and relate to stock weightings, gross exposure of the fund, cash allocation, stop loss limits, and so we get a great deal of comfort that the manager is equally focused on the generation of absolute return to investors, but also their preservation of capital. From a returns perspective, we gain a lot of comfort from the long-term track record of the manager in managing the fund. Over the long term, the fund has met its performance objective of 10% plus absolute return and has done so on a very consistent basis, providing consistent incremental return on a monthly basis, even in extreme down market conditions. In particular, the fund has demonstrated great capital preservation in times of market downturn, and this is one of the aspects we think makes the fund very attractive to many investors. So how should investors use the fund, given it is a differentiated fund for many investors? Well, we think it's actually a very versatile fund and can and should be used by a wide number of different investors. Firstly, we allocate to the fund within the Australian equities component of portfolios. Even though at times it won't always have 100% exposure to Australian equities, it does invest in the asset class and has at least some exposure to the Australian equities market at all times. The more conservative nature of the fund means that it won't necessarily participate in the full upside of a raging bull market, but provides great defensive qualities in down market conditions. Those types of characteristics are clearly going to appeal to a lot of different investors, in particular retiree investors who need and want exposure to growth assets within portfolios, but are very sensitive to capital losses, will find this fund attractive. Equally, the differentiated nature of the investment process in that it combines fundamental, bottom-up, long-only stock positions with shorter-term, short selling opportunities, as well as the top-down macro, provide a very differentiated approach to the management of Australian equities, which blends well with other Australian equity managers in a diversified portfolio.